coming up this month on Aftn.
The Senate bill is now 2 or 3 times as expensive as the House bill, which means they're giving relief to various groups of people.
You know, when we look to buy something, we look for a good value.
By the year 2000, that these programs that they were designing would be superseded by new programs, and that those people would take care of it by putting in a 4-digit field for year.
If you look at EEOC statistics, about 16,000 sexual harassment claims were filed last year.
Hi, everybody, and welcome to the May 1998 edition of Aftn. I'm Vicki Hudson.
And I'm Ralph Baker. Well, goodness me. Spring, is it spring at your house?
You know, funny as that happens, it is.
Hopefully it's spring where you are too, so we have a huge show. We should probably
spring into action.
Right.
Yeah. Well, this month we here at Aftn take another in-depth look at 4 new topics in the world of corporate accounting and finance. And to start off, Aftn's Mike Tucker speaks with former Commissioner of the IRS, Sheldon Cohen. Commissioner Cohen offers his opinions of the latest wave of reforms at the IRS. He also speaks about a number of other individual income tax issues.
In our second segment, Dr. Roger Strang considers the problem of attracting and retaining customers. His solution? Check the values that your company brings to the table.
In our third segment, we take another look at the pervasive year 2000 problem. This time around, Earl Chrysler takes a look at the genesis of the millennium bug and what steps need to be taken to fix the problem.
And finally, Tim McAvoy examines a number of recent sexual discrimination court cases, including a number of recent Supreme Court decisions expected by the end of this legislative session.
Well, the memo this month speaks with author Roger Crawford. His topic, resilience in the workplace. First, however, we turn to the News Center and Rob Willman with the Aftn News.
Thanks, Vicki, and hello, everyone, and welcome. Tax reform tops our news today. Senator William Roth is asking Congress to use projected budget surpluses to pay for the Taxpayer Rights Program, rather than raise taxes to offset such costs. The Clinton administration is urging business groups to speak out against another Republican plan that would scrap the tax code altogether. The president has been telling Republicans that now would be a bad time to tinker with the tax code. Clinton says overhauling tax laws is fine with him if everyone can agree on a new system beforehand.
It would cripple families' and businesses' ability to plan and save for the future while the uncertainty existed. It would undermine the fiscal progress of the last 5 years. No one concerned about fighting crime would even think about saying, well, 3 years from now we're going to throw out the criminal code and we'll figure out what to put in its place. No one would do that. That is what this proposal is.
Meanwhile, Vice President Al Gore has a plan to improve the IRS. In fact, as Kyoko Altman reports, Gore has unveiled 200 proposals to make the tax agency more user-friendly.
I believe that it will make the tax season easier and faster, and in some cases cheaper for average American families.
Among the recommendations, give agency field workers the authority to issue one-day emergency tax refunds to help taxpayers in hardship cases. Expand electronic and phone filing that will eliminate tons of paperwork and cut down on mistakes. And improve personal service by rewarding IRS workers for good customer relations.
The result of the change in the measures will mean more taxpayer satisfaction because IRS employees will be focused on satisfying them as opposed to focusing on collecting the maximum amount of revenue.
Many of the measures the vice president is touting are already in place, such as walk-in service for taxpayers on Saturdays. Republicans who led the charge against IRS abuses last fall say they've been working on a better plan that they say will give taxpayers additional rights in disputes with the IRS. But so far, Congress hasn't been able to deliver reforms fast enough to strike a chord with taxpayers.
It's going to take something like 10 years to complete the turnaround of this agency. Now, it's a long time, and I'm very impatient. I want to see action much faster.
With the White House and Republicans competing to win over voters, citizens can expect much more attention paid to unfair tax situations. Corporations don't have to reveal many of their new tax strategies when they're audited by the IRS, so says a recent federal appeals court ruling. The decision broadens the protection companies have in keeping their tax-saving strategies from IRS scrutiny. In fact, one expert says the ruling marks the first step toward granting accountants confidentiality privileges that lawyers now share with clients. According to the Wall Street Journal, accountants are thrilled with the ruling. That's because it will help them compete against attorneys who often do tax work. And companies might not have to worry about tax strategies if all the dire predictions about the year 2000 bug come true. Business Week says the U.S. will lose $119 billion in economic output from now until 2001. But some are fixing the problem in time. Merrill Lynch plans to spend $200 million in the next year solving remaining software glitches related to the date. The Senate has voted to give federal regulators of thrifts and credit unions authority to monitor computer vendors. And President Clinton has created a White House council to head off Y2K problems that threaten other federal services. The year 2000 problem is one of the top 10 technology issues this year. That's according to the annual list from the AICPA. The number one change that will affect businesses are the internet, intranets, private networks, and extranets. Other important technologies include information security and training. Also making the list are electronic commerce and communications technologies. In addition, telecommuting, mail advancements, and portable technology are expected to enhance our efficiency. And last on the list, remote connectivity. The Securities and Exchange Commission has a new electronic filing rule. The Commission will no longer accept filings made in paper that should have been sent electronically. If a paper document is submitted that shouldn't be, the SEC will return the filing without processing it. And while that news may make some hearts beat a little faster, pity the poor manager who has to fire an employee. A new study finds that bosses run double their risk of heart attack during the week after they give someone the pink slip. The research was conducted at 45 hospitals across the U.S. Experts say the data offers some of the strongest evidence yet that even brief spurts of on-the-job stress can be bad for the heart. Hope my boss is listening to that. Vicki, that's the news. Back to you.
Thanks so very much, Rob. Well, 1997 saw a flurry of news reports depicting an incredible number of IRS horror stories, discussing proposed reforms and debating changes mandated by Congress. What will these changes mean for the average individual, and how will reform alter the modern business climate?
You know, to answer these questions, AFTN's Mike Tucker spoke with Sheldon S. Cohen, former commissioner of the IRS. Commissioner Cohen offers his opinions on the current wave of reforms facing the IRS. He also offers his opinion on a number of individual income tax issues.
Commissioner Cohen, welcome back to the program. We've had you previously, but we've got a lot of developments in Washington dealing with the IRS, and there's nobody better to address those problems than you are.
Thank you.
What's new with the IRS?
Great deal. I mean, the restructuring hearings are going on the Hill. This bill's now before the Senate. There have been substantial hearings, 3 or 4 different sets of hearings by Senator Roth. They're now talking about moving the markup to sometime the week of, not next week, but probably the following week, which would be the end of March. If you get it the end of March, you barely have time to make it this session. This session's a short session, and Congress will be going out for an election. And so somebody said the other day, I think there are about 60 legislative days left in this session, so that's kind of a tight schedule.
Do you think we will get restructuring before Congress goes home to run for
My
re-election?
suspicion is you'll have a restructuring bill. Today's report, the day we're doing this, which is the 11th of March, says that the Senate bill is now 2 or 3 times as expensive as the House bill, which means they're giving relief to various groups of people, and they'll have to find revenue, of course, to match that up. They still have that requirement in their procedural rules. And meanwhile, the IRS is trying to get its act together. The new commissioner has been there for a few months. He's trying to get his team organized. He's trying to get his targets in sight and getting groups moving off and doing various planning. And that's ongoing.
So we've got IRS restructuring, we've got technical corrections coming from 97, and then we've got new generic tax proposals all in 1998, apparently.
That's right. This president has a group of targeted tax proposals that will maybe catch some attention. It's hard to say whether the Ways and Means Committee will have sufficient time to get another bill. This would really be a second revenue bill, the first revenue bill being the restructuring bill with some technical stuff perhaps attached on. But we haven't even had but one set of hearings. The secretary and his staff were up to had a hearing before the Ways and Means Committee just a week or 10 days ago. No bill drafted yet. No indications of what the House leadership, the Ways and Means leadership, agrees or disagrees with the administration. So that is a long ways away. I mean, there's no target yet.
I guess it's safe to say that if we get tax legislation, it'll be before Congress goes home for the summer.
Congress goes home, normally they take 3 weeks, maybe 4 weeks in August. The last number of years, they've been trying to establish that well in advance so everybody knows it. They can get to see their families, their children are out of school and so forth.
And run for re-election this year.
But normally they'd come back and they'd work September, October, and maybe even November. Here, they're going to go out, probably sometime in September. At least by the end of September they'll be out because they need October and a week or so into November. You got the midterm elections, so you can sort of bet your life that Congress is going to be finished by October 1st, and they would probably like to get finished by September 15th, September 20th, which means after they come back from vacation, they've got 3 weeks.
Commissioner, could you address what restructuring is all about, what the bill essentially proposes to do to the IRS?
Well, you've had a year and a half of hearings and study by a commission that was organized by the House and the Senate in concurrence with the President. There were a group of people who were selected, and they went off with a staff, and they studied the way the IRS is structured and the way it is managed. They got into a number of other things, too, that they probably shouldn't have gotten into. It kind of diverted their actions. But they're trying to make a friendlier IRS. And different people have different views about tax collection. There's a view afoot, and I think it comes out of that commission, that if you're nicer to most people who are otherwise compliant, they will be nicer and they will respond in kind, and we will have better relationships. We ought to have better relationships. We ought to have a revenue service that treats people with respect and dignity and gives them their due and tells them what the rules are in a fairly objective fashion, and then enforces them strictly, because if one person is allowed to get away with something, then you and I who comply are being taken advantage of.
Commissioner, I don't mean to sidetrack you, but everybody saw the parade of horrors on the television shows earlier in the year and in 1997. Are those the kinds of incidents that led to the restructuring? Was it this bad publicity?
No, I don't think that's it at all. I think that's a sideshow, because any day that you want to have a chamber of horrors, you can have a chamber of horrors. I mean, there are 105,000 people that work for the IRS, and if each one of them commits an error a month, I suspect they commit more than that, you will find some egregious errors, or you'll find some egregious attitudes. There are some employees, and I've talked to the newly appointed commissioner about that. I indicated to him that I thought that the weakest point of the IRS management was the first level supervision. That is, that agents and collection officers and so forth are not tightly supervised by their superiors. It's sort of a cheerleader kind of management. And that's not good, because if you get a bad apple, you don't bring him back to where he ought to be. So that's a problem that needs to be dealt with. Whether the Congress is dealing with it the way I would deal with it, or the way other managerial science would, if there is a managerial science, would deal with it is a different question. And whether it has the result that they think it'll have is entirely different. I believe referring to taxpayers as customers doesn't make them customers. I testified for the Senate Finance Committee that I didn't choose them and they didn't choose me. And in the customer situation, I choose my customers. I don't have to deal with anybody I don't want to deal with. And they choose me. They don't have to deal with me if they don't like me. There's another furniture store across the street or a place where I can buy a shirt or a tie.
But there's no other tax collector.
But there's no other tax collector. The Congress appointed the tax collector, and I have to deal with them whether I like it or not. And they are questioning my judgment. I took a deduction for taking you to lunch, Mike. Is that an appropriate deduction or not? They are questioning. I made the judgment that it was a business deduction, that it was appropriate. I put it down. And now a year and a half, 2-3 years later, they're coming back and they're questioning my judgment. At best, that is a stressful situation. And I may be very defensive about it. So this is going to be a stressful kind of situation. And I think that some of the congressmen and senators have this naive notion that if you're nice to taxpayers, they will be nice in return. Well, the nice ones will be nice, but the nasty ones will be nasty. And that's true of revenue agents, who ought to be supervised better. But the revenue agents don't pick those taxpayers, so they don't know whether they've got a nice one or a nasty one when they go in there.
Does the current restructuring proposal do anything in terms of tightening control over the agents that we would normally run into in an audit?
I mean, one of the things that they've insisted on, and I think rightfully so, is that revenue agents not be judged solely by production or revenue officers or collection officers. And that's absolutely right. I mean, you can get a bad run of cases. Or, I mean, but on the other hand, you can't say it is not an element to be taken into account. We all know that a good revenue officer will bring in more money than a bad revenue officer. He'll also be more polite, he'll follow all the rules and so forth. And the same is true of a revenue agent. So it is a factor, it is not the sole factor. And the difficulty has been that the Revenue Service gets sloppy in its administration and supervision, and lazy supervisors will use it as the only factor. It's easier to say Joe brought in $1 million and Sam only brought in $700,000. Joe's the better revenue agent. May not be so. He may be abusive. He may have done a lot of other things. Maybe his adjustments don't hold up on appeals, and the other fellows do. I mean, if the $750,000 fellows, all of his hold up on appeals, and the other fellow only gets 50%, then of course the data doesn't hold. And it's hard to collate that data because it takes so long. That is, the audit may take a few months, 6 months, a year. Then it goes through appeals. That may be another year, year and a half. So that by the time you get the numbers together, it's a changing cast of characters. So it's not easy to do, but it ought to be done. That was kind of the starting point. The Chamber of Horror business came out later. And as I say, anytime the Congress wants to have that same hearing, 6 months from today, 6 years from today, they can have that hearing and they will find abusive cases.
And I presume they would find abusive cases in other agencies of the government besides the IRS.
And you'd find them in the state licensing bureaus or the state fire inspectors. I mean, you'll find we're dealing with human beings, and we're dealing with fluid situations where they're dealing with other human beings, and you have to mesh those personalities and the rules, and they are stressful situations, so there will be abuse. There'll be abuse on both sides, of course.
Commissioner, if we get restructuring enacted, will the IRS look substantially different from what it looks like today?
Not really. If we get restructuring, it's mostly at the top management level. That is, the Congress is proposing a board of directors, if you will, which would have a chairman and outside members, as well as the Senate. I guess the bill provides that the commissioner and the secretary or the deputy secretary would be a member of the board. And the House has one number, the Senate has a number. And every time you look at this board, it gets bigger and therefore more unwieldy. There are a number of suggestions that the board ought to be advisory instead of basically directory, because if some of the criticisms of the House bill has been that the board is another source of power, then you don't know whether the commissioner runs the agency, the secretary runs the agency, or the board runs the agency, or do all three.
Is there some sort of right of appeal to the board?
Not really. The board is supposed to be like a board of directors of a corporation, and in fact, there's a silly provision of the House bill that says it'll meet once a month. Well, you know, as I said before the Senate Finance Committee, maybe you need to have 3 meetings in 1 month and don't need a meeting the next month. You ought to meet at the call of the chair as many times as is necessary during a year. On the average, once a month, but that doesn't have to be. I mean, you know, in the middle of July, if they've had 2 meetings in June, they don't need a meeting in July. You know, that would be obvious to me.
Commissioner,
the question is, of course, one of the hard questions is the board now is directed to have as one of its members the union president of the largest employee union of the IRS. There is one. It is a very good union. The union leader is a very bright guy. I oppose that position on the basis that many of the calls that he has to make as union leader are now going to be, he's going to be a judge, in effect, when he's on the board. And I just don't think, I think he has a voice as the union leader. He probably ought to be invited as an ex officio member, or perhaps to sit in the back, to be available for a conference with the board. But my own view is he ought not be a member of the board.
From the practitioner's perspective, the CPA or the lawyer out representing clients in the trenches every day, would that individual likely see any change at all in the way he or she relates to the IRS?
No. I mean, because this is who sets the budget priorities. For example, one of the things that they've said is that the board would not be involved in audits, collections, investigations. On the other hand, I've said before in hearings before the committee that the person who sets the budget sets the policy. And if the board has a role in setting the budget and there is a role for the board set out, then it has an influence on policy. Policy, what you're really doing is controlled by what you're willing to pay for. If you're not willing to appropriate money for it, it isn't policy. So if they have control over some of the budget or big voice in the budget, then they have a big voice in policy, even though the statute says they shouldn't have it. And I think the congressmen and senators have this naive notion that they can put them in this isolation booth and they won't get involved with cases, because getting these 8, 10, whatever number of people it ends up being involved in policy is to introduce a whole new way of doing things. We're introducing laymen into a technical structure, and they have friends and they have acquaintances, and you have conflicts of interest. All of those kinds of problems would arise if they get into adjudication of cases. You don't want that, I don't think. Everybody says they don't want that, and yet the rules seem to allow it.
Commissioner, we have seen evidence in the last couple months of a problem that we haven't seen for a very long time, and that's the conflict between lawyers and CPAs representing tax clients and the bar getting incensed about certain things that CPAs are doing. And this has kind of come to a head in the area of lawyer-client confidentiality and the proposed CPA-client confidentiality. What's going on here?
I have to admit a conflict, because in my youth I was a CPA and I went to law school, and
But you grew up and became a lawyer.
became a lawyer, and all of these things come to play in that role. I got out of accounting as a youngster because I conceived that the attest function and the advocacy function got in the way of each other. I couldn't be an objective attester and at the same time an ardent advocate. And I suspect, I still think that way, and therefore I have to announce my prejudices before I get into the discussion. Each of the professions has different conflict rules too, in terms of conflict of interest and the ability to represent taxpayers with differing interests. And that gets in the way, and because we each apply them differently, and our supervisory groups apply them differently. But of course, we're each competing in the world of tax advice. We each play different roles. The lawyers have played an advocacy role, basically, in appeals and in the court system, And the accountants have more often than not in the past played the role in tax planning and in tax preparation. And the accounting firms now are getting bigger and more aggressive, and they're moving into some of the fields, and so there's a lot of bumping, and the basketball game's getting a little rough. It's not supposed to be a contact sport. There was once, back in the days when I first started in this business back in the 50s, the Joint Conference of Lawyers and Accountants was created to try to avoid this bumping and pushing and shoving, but it seems to be a failure, and it's basically become a eunuch. It just sort of stands around and watches and has ceremonial meetings from time to time and doesn't do anything. And the accountants are now moving on legislation which has been suggested in both the House bill and now talked about in the Senate bill that would give accountants the privilege before the IRS. And it's in various iterations. In the House bill, it applies only to civil audits, not to litigation. There's some talk maybe in the Senate bill of extending it to litigation. If it's extended to litigation, I suspect the House and the Senate Judiciary Committees will get involved because it affects federal courts, and that's a different set of rules. As proposed, and in reality, the lawyer-client privilege is a much narrower privilege than most people recognize. And it involves, it's hard to get the lawyer-client privilege in a tax planning situation any more than it is in the accounting situation. In the accounting situation, where I am the auditor and I am either assist in the tax preparation or prepare the tax returns perhaps, anything I do is not privileged. If I did it as a lawyer, it's not privileged, because anything that's intended to be reflected on the tax return is intended to be disclosed, and therefore all the backup data behind that is disclosable and doesn't attain privilege.
How about the transactions in the back of the tax return? So we're taking the position that this is a 355 spinoff, or we're taking the position that this is a good 351 transfer, and certain income tax consequences flow from that.
Well, if the factual basis for that is not privileged, because it's intended to be inflected on the tax return. So yeah, I mean, some of the planning documents. There's a recent case in Edelman in the Second Circuit, which raises the work product privilege, and in this case, where the general counsel of a major corporation asked one of the big six accounting firms, their personnel, to do a study for him of a major reorganization that would result, and did result, in a large loss, which he felt was 100% audit ticket. I mean, if you did this thing, it was so large and so dramatic effect on their tax return that it would be audited. The question was whether the work product that he produced for the general counsel was covered under the work product privilege, and the Second Circuit basically said it can be. It didn't say it is. It sent it back for a determination by the district court.
How do you read the Edelman case in the context of what you would do for a client?
You know, most of what any of us do is disclosable and will be disclosed. There's very little counseling that we do that is ever privileged. And interestingly enough, there's no attempt to get the accountant's privilege in a criminal context, so that if the client becomes embroiled in a criminal investigation, neither of these bills, neither the House nor the Senate version, as I've seen them lately, would give the accountant any privilege, whereas a lawyer who was counseling the client on the criminal aspects of the case, not on the factual aspects, keeping away from that, would have the privilege. And one of the problems that's going to occur here is that there's a lot of slapdash knowledge out there, and particularly many accountants who are not used to this area are going to say they have a privilege to their client. Their client is going to feel comforted by this. He's going to tell them some things he probably shouldn't tell them.
And it's all discoverable.
And then someday it's going to be fully discoverable. And then egg is going to be on everybody's face. And this is, the rules in regard to lawyers are becoming tighter and tighter. We have less and less privilege. So the accountant's now saying, me too is going to make a promise, I suspect, that is not going to be kept. And
it's a very small piece.
Very small piece. There are going to be a lot of disappointed people out there, I suspect.
Commissioner, if you look forward to the rest of 1998 and perhaps on into the next year or so, what's going to happen to the 97 legislation? Are we going to stay with the greater than 18 months in terms of the long capital gain holding period, or is that going to be rolled back, do you think?
Well, you know, Congress made this conscious decision just a few months ago, 6, 7 months ago, to give us this 4 or 5 different category of capital gains. I mean, you know, before May, after May, less than a year, more than a year, less than 18 months, more than 18 months. When we get up to 2001, we have 18% for 5 years. I mean, it's going to be a wonderful new world. Nobody worried. I mean, it's the same time that the House was worrying about the restructuring of the IRS and this very complex law that causes the IRS and taxpayers all this trouble in getting along. Nobody worried about the complications. They were trying to give relief. I've never seen a taxpayer worry about complications if they benefit them. It's only if they hurt them. So as soon as the capital gain law was passed and people began to see mock-ups of the Schedule D on which it would have to be reported, so instead of being 3 or 4 or 5 lines, it went up to 19 or 20 lines, and they saw this miserable mess that they'd have to prepare, and they are now experiencing it in trying to delineate when the gain occurred and how long the holding period was and all that sort of stuff. Now they want to say, okay, let's get rid of the 18-month and let's have, 1 year and over.
Is that the current proposal?
That's probably likely. At least if you had to make a bet, you'd make a bet more likely than not it'll pass. That is, Archer, who is the chairman of the Ways and Means Committee, is spoken out vigorously in favor of that. I haven't heard anybody vigorously oppose it. A few others have.
How about the president?
The president's been quiet. I think people at the Treasury, assuming you could find the revenue, assuming you could find the, I don't know what that costs. I don't know what going from, back to 12 months. It's not a low ticket item because you make a lot more things subject to 20% than 28%.
Commissioner, we have so many other things to talk about, but we're out of time. Will you come back and visit with us again?
Sure. Glad to.
Thank you.
All right. Well, is your business having problems attracting and retaining customers? If so, it may be time to check your values.
Maybe. Not your personal values, but the values that you as an organization offer your customers. In our second segment, Roger Strang, a professional consultant in the areas of marketing strategy and executive development, examines how customers measure values and examines the dynamics involved.
He also outlines a number of important strategies that will enable your organization to add value to its products.
Roger, welcome back to the program.
Thank you, Mike.
We're going to talk about checking our values to win. It sounds like a book title.
Well, it would be a great book title, wouldn't it? But probably too long to be effective. But it really does raise an issue that I think is important and that's often overlooked by many businesses.
Winning means keeping your market, getting a greater market. So why don't we look at it in the negative sense? Why do companies lose?
Well, the two reasons why companies lose customers. Number one, the most common reason is because they do something to drive their customers away. The other is because, of course, their competitors become much more aggressive and really offer their customers a package of values that the company isn't matching.
What do you mean by value, and how do customers measure it?
Well, when we think about value, we can think about it most easily in terms of our everyday lives. When we look to buy something, we look for a good value, and it's exactly the same with our business clients and our business customers. things are changing so quickly. There's such a so many different offers out there that we've really become accustomed to looking for good value. Why should we pay full price, if you like, for something that when it's available from a discount store? And just as when we make our purchases, we look for the best value. Again, we see it with our business customers, and we measure value in a very straightforward way. Customers, whether we're doing it as customers or our customers, measure value in two very important trade-offs. Number one, they look at the trade-off of the benefits that they get from owning the product or using the service versus all of the costs that are associated with that product or service. Number two, they look at that package and say, well, how does this compare with what the competitor's offering?
Does value correlate with price? And do customers say, well, I'll pay more for greater value?
There's no question it does, and it's very interesting because we often get this comment, having been a former salesman and heard salesman, well, they didn't buy because of price. That's true in very, very few cases, because if you understand how customers think about value, then you can see the role that price plays.
How do they think about value?
Well, when you think about that as a trade-off, what customers are saying, is really, I'm not going to buy the lowest price product. If everybody thought that way, then we'd wear watches by Casio and we'd buy our shirts at Kmart. Like but no, we really, always think about the price that we pay in relation to what we get for it. So when we think about what are our customers looking for, we have to look at all of the benefits that they're looking to get from owning our product or service, and these could be, how does the product or service help them run their production lines faster? How does it help them manage their business more effectively? How does it help them serve their customer better? How does it make them feel about themselves having this particular brand name on their wrist or on the computers in their office? So they really think about a whole spectrum of possible benefits, and really when you think about the benefits, there are almost as many benefits as there are people, because each of our customers looks at things in their own particular way.
Roger, if I'm a company and I'm perceived and actually have provided value, how do I lose that connection with my customers? I'm successful in 1997, but I'm less successful in 1998. Is that because I've perceived as providing less value?
Well, that's exactly what happens, because value is always measured in terms of customers' perceptions. And it's very easy for a company to get into a situation where we understand the value that our customers are looking for. So if you think about a company like Sears or a company like General Motors, they're very, very successful leaders, but not paying any attention to the Walmarts and the Kmarts coming along, and the Japanese cars and the revised Ford and so on in General Motors' case. So they're saying, why shouldn't I stay with what worked? Cadillac's been enormously successful. But then, along comes Mercedes, and people say, well, this offers something different and new. Why should I, keep going? That sort of old hat. So, competitors change, tastes and preferences change. In a business sense, a good example that happens with many products. When companies first want to buy a product, their people need a lot of training. So training becomes important. That's one of the benefits that you would provide along with the product. Sort of the IBM model. We'll give you the hardware, and we'll give you the software, and we'll give you the training, and by the way, we'll manage it for you. As companies get more confident about their ability to use the equipment, they start saying, well, why should I buy from you at this price? Because, yes, I quite like the hardware, but I've already got the operating system. It's working well. I've got programmers who can update it, and the people that I've got are perfectly comfortable running it. They don't need the training. So, the needs of your customers change, and that, if you're not paying attention to that, again, it's easy to see how you can sort of, be charging a high price for a full service package when the winners are the companies that are saying, we'll give you exactly what you need, no more, no less, and we'll charge you the price for it.
Roger, you mentioned the American automobile industry being kind of ambushed by Japanese auto manufacturers in the 1970s and early 1980s. Isn't that a bit simplistic? I mean, didn't they always think that they were providing value? Didn't they know that the Japanese were coming in? Was it just a matter of being oblivious to new and greater value being offered to the consumer?
Well, I think it is being oblivious. I think it's not recognizing when the needs of your customers change. It's very difficult to define value in terms of what you do every day. There's a very interesting study of hotel managers, and they asked hotel managers what made for a good coffee break in a meeting. And the hotel managers all said, well, it's having hot coffee, it's having short coffee lines, it's having fresh baked goods, and that sort of thing. Now, when they asked managers at the meeting what made for a good coffee break, their response was, well, plenty of telephones, easy access to the bathrooms, and by the way, it would be good to have a bit of coffee.
It's a matter of perspective.
It's a matter of understanding your customer's perspective. Your perspective doesn't matter because the customer is going to buy on what looks like a good value to them, and really that's where industry after industry and company after company they lose sight of that. They say, well, we know best, and I mean, even Mercedes we talked about. The new CEO was quoted when they got hit with Lexus and so on. We knew what the customer should have, and we would tell them what they would pay for it. And you sort of, if you've got that philosophy in the organization, and that's true of IBM and the auto companies and many of the others, as well as Mercedes, it makes it very difficult to really understand what the customer is looking for.
Roger, one of the areas where this probably is a big issue is suppliers. If you are my supplier and I've got a universe of suppliers out there, what kind of cost-benefit analysis do I do in order to choose you as opposed to another supplier?
Well, I think again, it depends on your needs as far as the benefits are concerned. We talked, I think, about a lot of the different possibilities. When it comes to the cost side, this is again one of the interesting pieces, because sophisticated customers, and in this value area, I think all of us are becoming more sophisticated. Sophisticated customers don't look at just the price they pay. They look at what we might think of as the life cycle costs of owning a product or using a service. And when we start to think of life cycle costs, we start to think of the costs of acquisition. How much does it cost us to actually order and get that product or service into our organization? What do we have to go through in terms of filling out order forms or mailing it in or calling people up? How long do we have to wait when we get it? Is it what we ordered, or there's a mix-up? Is it packaged the way we want it or set up in a form that's easy to use? Then there's the actual cost of storage or ownership. Again, particularly if you've got a manufacturing business, you've got inventory costs, and you've got costs of spoilage. Does it go for perishable products, or costs of damage? You've got the working capital tied up in your inventory. Then there's the cost of use. How easy is it to use? Is it in a form that you can use it, or does it have to be broken down or transformed in order to use it? How simple is it? How well can your people understand it? If it's in the area of equipment or software, how many times do I have to fix it? How does it, does it break down? Is it robust? Is it flexible? Those maintenance and servicing costs. And then at the end, for many products, it's, what does it cost me to get rid of it? If you're petroleum-based products or tires or, many products, that disposal cost becomes an important issue. And, when people start thinking about it, they really start to say, well, yeah, I'm willing to pay a higher price for a more reliable product because that's going to last longer. And just to continue with the auto company examples, one of the things that Cadillac division did with their North Star engine was promote, hey, 100,000 miles without a tune-up. And that becomes a very successful argument with a sophisticated, value-oriented buyer.
Let's take another tack here. We've got viewers that say, well, I'd love to add value, and I'd like to be the supplier that you choose. What strategies can I pursue so that I can be perceived as adding value?
Well, there's sort of two parts to this. Let me just talk a little bit first about ways in which you can assess how your value stacks up. Again, going back to the key measure is, what are your customers saying to you? And there are some very interesting research techniques that can formally help you measure that. One approach that I've used with a number of clients I call customer value analysis. And there the process is really asking customers, number one, what are the criteria that are important to them if they are choosing a supplier in a particular area? And then number two, asking them, how do we stack up on each of those? So you get a ranking of the importance, then you get how they see us or our client. And then the third question is, how do competitors stack up? And there you can really start to see what's important and how you're performing relative to competitors. And that gives you some very specific areas that you may want to address in your strategy. So if it's an on-time delivery issue, that's something you need to pay attention to. If it's a reliability issue, that shows you where you need to pay attention. If it's speed to market, ease of use, friendliness of the people, all of those are things that customers are willing to tell you, and probably in a very realistic way, except for price. Customers will always say you're too high priced, but that's their job, so you learn to discount that one. But if we go back to the question then, what are some of the strategies that we can follow? Again, there are many different approaches. The most common one would be, how can I add value by adding benefits? This is something the auto companies, the software companies. I've got Office 97. And, I hope I live long enough to use all the bits and pieces of programs that are there. You just look at it and say, well, clearly Microsoft and many of the other companies think if they give you more, that's what you want. That's one strategy, not always a good strategy. There's some interesting examples of, reducing technology to build the market, but that's probably the most common. But you need to recognize that value is in the eye of the beholder. So how do customers perceive what it is that you're offering? So you can work to expand or change customers' perceptions of what it is that you do. A good example of this is a company like Southwest Airlines. Southwest Airlines presents itself quite appropriately as the value, the low-cost airline. So there's a lot of focus on price. But that's not all they do, and they created this award for themselves, which they award themselves every year, that talks not only about their fares, but about their on-time arrivals and their customer complaints and their baggage problems. But what they're doing is changing those perceptions. The Triple Crown is to get away from just being a price-oriented program. We also need to recognize that perceptions of value are shaped by the environment in which you see the product or you experience the service. So smart companies say, well, perhaps I can do something about the waiting room for my clinic or my offices, or the packaging that my product is presented in. That again will reinforce the values that we're trying to express. One of the very good examples, one of my favorite airlines, SAS, and one of the things that the CEO of SAS did was work with Boeing to sort of change the design of the planes to make them fatter, so that because their market was business travelers, long haul across the Atlantic, and trying to make people more comfortable while they're enjoying the service. So, working on the environment in which you experience the service. Another key to value is, how am I treated? How do the people treat me? And so what can you do to make the experience better? And the classic of this is Disney. I mean, Disney people make things fun. It's sort of hard to be in a Disney theme park, but if you sort of step back, you'd swear that perhaps they're all sniffing nitrous oxide between things. But it's that their enthusiasm for it and the enjoyment that they have that contributes enormously to the experience that you have.
Roger, we've just got a couple minutes left, and you've talked about the perception of value and strategies to add value. Is there a way for a company to measure whether they're successful in adding value and being perceived as adding value?
There is a very easy way. If customers keep buying from you, value is the measurement isn't. I mean, people are very clear about what that they're going to buy the best value. So if you're keeping your customers, bringing in new customers, then that's a very clear measure that your value proposition is succeeding. And we sort of talked a lot about strategies on the benefit side. There are an awful lot of strategies on the cost side too. Can you lower some of those costs? And again, that's something that companies, it's not just a matter of cutting price, to go back to your earlier question. It's, can we lower all of those costs? Can we make it easier to buy and use our product? Can we take care of recycling the product for our customers? Can we make it easier to use so that it doesn't break down, and so that the maintenance costs are less? All of those things, are part of the options that come when you start to think about, what I'm doing is providing the best value possible, better than competitors, to customers.
Final question, Roger. Is the issue of valuation even worth thinking about strategically if you're doing well? Hey, we're on top of the market. We're doing fine. We obviously are adding value. Is it an issue for us?
Well, I think what helps is if you understand what it is that makes up your value. I think you still have to keep tracking it, and that customer value analysis that I mentioned is something that companies would do, maybe not every year, but perhaps on a 2 or 3 year cycle, to make sure that, that they're still performing. Because, as I said at the beginning, value from a customer's point of view involves 2 sets of trade-offs. Not only, am I really getting my money's worth, the way you talked about it, but is this supplier giving me a better value than the competitors? And so you're not only tracking or paying attention to what your customers are looking for, you're paying attention to how they perceive the competitors. And when those competitors come along, they're new, they're exciting, they're aggressive, you really have, that's where you really need to pay attention, because if you leave it too long, they're established, you're out of the game.
Thanks very much, Roger.
Thanks.
Coming up next is this month's memo, back from vacation, tanned and well rested. This month, the memo speaks to Roger Crawford, the author of the book, How High Can You Bounce?
Roger's main premise, how positively you respond to the inevitable setbacks that life hands you, determines the general level of happiness and the level of achievement in your life. Well, that kind of positive response to challenges carries over from your personal life to your existence in the workplace. For more, here's Roger with the AFTN memo.
I wrote the book, How High Can You Bounce, specific on the subject of resilience for this reason. I believe that our ability to respond positively to the inevitable setbacks in our lives will determine our level of happiness and our level of achievement. So that's why I think the need for resilience has never been greater, whether we be a household executive or a business executive. No matter who we are or what we do, we're facing change. I mean, I'm sure you've seen this, Lori, that the velocity and the complexity of our lives is changing rapidly, and we've got to be changing along with that, and that requires resilience. I wrote the book based upon 3 questions. The reason I used questions was because that allows the reader then to develop their own answers. The 3 questions come from an experience I had in Vancouver, Canada. Driving into the United States, the border guard stopped me and he asked me, where are you coming from? How long have you been there? And where are you going? The first question, where are you coming from? The interpretation of your past will determine your level of resilience. I'm sure you've seen that non-resilient people look into their past, they see problems, weakness, and failure. They dwell on that evidence to support their mental attitude. Now, resilient people look into their past, they see strength, solutions, and inspiration. They dwell on that evidence to support their mental attitude. What's fascinating is you can take individuals or organizations with similar past, totally different interpretations. See, I think we become what we dwell on. The second question, how long have you been there? When you ask about resilience in the workplace, I think we need to ask this question, how long have you been there every day? Because I think the greatest risk that we have in business today is standing still. I mean, I know for me in my life, when I ask myself the question, how long have I been there? Sometimes I think I'm in a groove. I look at that question, or I answer that question, that groove's a rut. How long have you been there? Third and final question, where are you going? Once we have clarity, I think that'll give our vision its cutting edge. I learned that speaking for Frito-Lay. The founder was a gentleman named Herman Lay, and he had a great quote. He said, I started this company with a potato and a pad of paper. Don't tell me something's impossible. See, that's clarity. That fortified his resilience. I think resilience is the key, really, to sales success, ability to manage those day-to-day disappointments. I believe we need to differentiate between fear and anxiety. You've probably heard the term, the fear of rejection. I like to call it the anxiety of rejection. Here's why. If you look at the greatest accomplishment you've ever had in your life, I bet you'll find there was fear. Because fear tells us we've stepped out of our comfort zone, that we've entered into an area of uncertainty. That always creates a little bit of fear. Here's an example, like fight or flight response. Because fear is tied to circumstance. But anxiety is what disables us. And people say, well, I thought fear and anxiety were the same thing. Not by definition. Anxiety is the anticipation of a negative event, whether it occurs or not. So people ask me, okay, Roger, well then, how do I alleviate anxiety? I think by using the language of resilience. I've had a physical challenge that affects all 4 of my limbs. I guess I said I had one. I still have it. I have 2 fingers on my left hand and 1 finger on my right hand. I wear an artificial left leg, and I have 3 toes on my right foot. But you know, people ask me that all the time. They say, Roger, you know, what about your life and this challenge that you faced? And you know, Lori, I've just believed that handicaps come in many forms. Physical, attitudinal, emotional, intellectual. The only difference is some handicaps you can see and some you can't. But I really believe that it's the ones that you cannot see that are more challenging to overcome, because maybe you don't have to acknowledge them or deal with them. You can push them in the background. Never have to face them. I face this every single day. But I would say to the people watching that the essence of my life is not far different than theirs. Everybody faces adversity in one form or another. I think tremendous benefits. In writing this book, I did a great deal of study on Martin Seligman's work. He wrote the book Learned Optimism, and he tells us that a resilient attitude, and I want to differentiate resilient attitude from positive attitude, if I might, because I think it's one of the benefits. I believe in positive thinking. However, I don't believe positive thinking works every time. Here's what I mean. Sometimes I find people think positive thinking means that you should deny your situation. In other words, I'm not happy, but I'm a positive thinker, so I'm going to say I'm happy. I'm a salesperson, I'm not successful, but I'm a positive thinker, so I'm going to tell myself I'm successful. I believe that resilient thinking is acknowledging your roadblock, acknowledging the fact that maybe you're not happy today, or maybe you haven't had the success that you should. Acknowledge that, but choose to focus in on the positive. I'm a lousy piano player. That's the way it goes. I don't spend a whole lot of time trying to play the piano. I focus on what I can control. I think the same principle is true for resilient thinking. I've had so many people tell me, well, gosh, I've tried to think positive. I've tried to tell myself I'm happy when I'm not. And I say, just admit that you're not happy. Admit that you're not happy, but then choose to focus on the positive. The positive is you can control your attitude, quality, content of your thoughts. That's good news. Choose to focus in on that. Some circumstance you can't control. You can always control your choice. I think the most important message that I can bring to people comes from an experience I had on April 19th, 1996. I was given the incredible honor of being one of the speakers in Oklahoma City, the year anniversary of the tragic bombing that happened there. And I must tell you, Lori, I was overwhelmed by this request because as I look at my hands and my legs, it's really been an inconvenience, quite frankly. I remember I got up very early that morning and I got the paper and I saw a picture of a young lady named Dana Bradley. Dana had lost her mother and her 2 children in this tragedy. You probably read about her. In fact, she was pinned in the rubble for 5 days. They removed her left leg to free her. Dana Bradley was on the front page of the morning paper on April 19th, 1996, holding her newborn son, who was born 364 days after this tragedy. And I'll tell you, Lori, I believe that Dana Bradley has some experiential wisdom that all of us can learn from, and it is this. Challenges are inevitable. Defeat is optional. The human spirit has a remarkable ability to bounce back after being challenged. Dana Bradley teaches us that, and there's a lot to learn from her, and the message that she gives us about our own ability to be resilient.
The year 2000 problem, commonly known as the millennium bug, is a story that's really been flooding the media in recent months. Now, why is this simple coding problem so important? Well, because if solutions are not enacted in time, this simple data entry shortcut threatens to bring the global economy literally to its knees at 12:01 a.m., January 1st, 2000.
Yeah. Earl Chrysler, the director of School of Business's MBA program at Quinnipiac College in Connecticut, speaks with AFTN's Mike Tucker about the genesis of this problem and why the business world should fear the year 2000.
If you're a supplier to Prudential and your computer system will not be fully tuned up by the year 2000, beware. The insurance company may dump you.
If necessary, we'll actually make a business decision to look for an alternative partner, meaning that we will not be able to continue to work with that partner that we depend on.
One expert sees a computer plight in military terms.
If you think of it as waging a battle, supply lines are everything. A terrific fighting group can only do so much if they aren't supplied. They can only last so long.
Big companies are getting anxious because many of their smaller suppliers are behind deadline in the race to fix the so-called year 2000 glitch, the bug that causes computers to misread the 2 zeros to mean 1900 instead of 2000.
We are getting every indication from our suppliers that they are taking this program seriously. We remain concerned that their suppliers and their suppliers' suppliers may not be prepared. So we are going overboard on communicating the sense of urgency.
Automakers cannot afford to easily ditch partners because it takes a year to find, test, and nurture a new supplier. As the clock ticks, the rush to get everyone up to speed has sparked an unusual degree of cooperation among big companies. The big three have teamed up, as have the local phone companies, to prod unprepared suppliers so that the laggards don't disrupt the food chain.
Earl, welcome to the program.
Thank you, Mike.
We've got this major problem, the millennium problem, the Y2K problem. Is it a software problem or a hardware problem?
Well, it could be both, Mike. There are algorithms for converting the date from the standard month, day, and year format into, we'll say, day of year and year. And these kinds of algorithms can be pre-programmed on a chip, in which case you can use this kind of a chip in a piece of equipment such as data transmission devices, ATM machines, electronic cash registers. But that kind of a problem is minor. If there was going to be a problem, they could really just remove the chip, reprogram it, put it back in, and everything would be taken care of. So the problem is not in the hardware arena, it's in the software area.
If it were in the hardware, we could replace the hardware, right?
That's correct.
We've got a lot of different software systems, though, don't we?
Well, primarily they fall into two categories, Mike. One is called system software, and the system software is the programs that actually manage the resources of the computer and run the actual applications programs. Application software is the nuts and bolts of the data processing area. It's such things as accounts receivable, accounts payable, and that sort of thing.
Well, we're in the year 2000, Earl. What happens? Does the world come to an end?
I certainly hope not. The problem is that most of the people, when they originally designed systems, they put in 2 digits for the year field. This was primarily because many of the people figured that by the year 2000, that these programs that they were designing would be superseded by new programs, and that those people would take care of it by putting in a 4-digit field for year. Or in some instances, it just never entered their mind that the year 2000 was going to come, so to speak.
So the issue is really in applications then?
That's correct. There are some instances in the software area in terms of operating system software where the operating system date stamps and time stamps such things as transactions for an online system for a bank or something like that. Also, when a program creates a new file, it date and time stamps that file as to the date that it was created. And also, programmers can ask by certain things in their program that a date until which this file is saved can be written on the file so that no one could accidentally overwrite it. And so those kinds of things in the operating system software have to be examined. Now, the manufacturers of computers provide this system software. So if an organization is concerned about whether or not this can be a problem when the year 2000 comes, they should contact the manufacturer of their computer and ask them specifically if their operating system software is 2000 year compliant.
Will they know?
I would think that the operating systems people at the manufacturers would be right on top of that and be able to respond, yes.
What if the manufacturer says it isn't?
Then I would say that we have a significant problem in the fact that those people at the manufacturer's organization should be responding to this kind of thing, and about the only thing that we could ask is how much will you charge to make it 2000 year compliant.
What happens in the year 2000 when you've got a computer program that really isn't compliant?
Well, as I said, when the system was originally designed, these people would have put in a 2-digit field for a year. Now, there are two ways in which a computer programmer could have this data stored, either as just a 2-digit field or a 2-digit field which is signed. If we had, we'll say, 1999, and we roll over to the next year, we go to 2000, which gives us 00 in this field. Now, if we wanted to figure elapsed time on something, we'll say from 1998 to this next year, we would take 98 and subtract it from the current year, which is 2000. If you had a signed field, you would subtract 98 from 00 and end up with a minus 98. If it wasn't signed, you'd subtract 98 from 00 and end up with 98. Either way, this presents a major problem.
Well, let's address the problem. What can we do? We know that we have a problem. We've got a couple years. Can you, Earl Chrysler, give us the solution?
Well, I can tell you the steps we should have to go through to approach this particular problem. The first thing that we'd have to do is we'd have to look at two things. One is the fact that the computer program would have to be changed, and it's possible that the data file would also have to be changed.
How do we go about doing that?
Well, we'd have to look at the program, and if the program has a two-digit date field, and the programmer allowed this two-digit date field to be stored in a manner which is called display, then this two-digit field would take up 2 bytes in the record. However, there is another option, and that is you could call this field to be stored in a manner which is called computational 3, otherwise known as packed decimal. If it was stored in packed decimal form, we can actually put 4 digits in 2 bytes of storage. And I have a demonstration of that in my exhibit. If you'll take a look at Exhibit 3, it shows that the manner in which you store the data actually is represented in 2 different ways. Now, if the person who originally designed the system made a record layout, which is shown like in my Exhibit 1, then you can see all of the individual fields, and you'd look at it to determine which data resided where. And these names for these fields are what the programmer uses to access the data. If you take a look at Exhibit 2, it shows how that data actually looks out on a disk or tape file. Now, the thing that we have to do is either expand the year field to 4 bytes from 2, or we would have to redefine the field, if it has not been defined as computational 3, into computational 3. This would allow us to retain the same length record we had previously. However, if we have to expand it 2 more bytes, the other solution, then our record lengths do not conform to what they did previously, and that presents a significant problem.
Earl, the solutions that are available to us, these are cheap and easy solutions that you could probably address and correct in an hour or so?
I wish that were so, Mike. So do many firms. In fact, the Gartner Group consulting company has estimated the cost of correcting the year 2000 problem to consist of 2 components. They estimate the cost of actually curing the programs at $300 billion nationwide, and the cost of correcting the actual data files at an additional $300 billion nationwide. Now, the problem is not quite that simple, Mike. And one of the major reasons is that, say, for example, I was a programmer assigned to a new system, and I was told to write a particular program, and a brand new master file was going to be created as part of the system. What I do is I end up defining a set of names for the data fields, as I showed in Exhibit 1. Now, another programmer assigned to another program, which is part of the same system, may come up with a different set of names for exactly the same data fields. Also, maybe 6 months...
In a third programmer, in a fourth programmer,
6 months later, a year later, a user thinks of another use for this data, and the same thing happens again. A new set of names is designed for this. So this means that we now have a multitude of names for the exact same fields on a record, so that compounds the problem of locating this particular field in a record.
And we'll return to Earl in just a moment, but let's pause now to review some of the points he's made. The Millennium Bug is a problem centered in computer software systems. Now, unlike hardware, which can be expensive but relatively easy to replace, software programs that contain the Y2K glitch are predominantly programs that were custom designed for an organization's needs and therefore significantly more difficult to change.
The problem occurs in both the operating systems that run computer systems and in the applications that form the actual tools operators use. The problem began with the need to save space in the memories of early computers. By dropping 2 of the 4 digits in the year column and using 2 digits, 2-byte fields, programmers were able to economize. Eventually, as computers became more capable, it was reasoned that the shortcuts would be replaced by a full 4-digit field. Unfortunately, by the time the memory capacity was developed, the shortcut had become standard practice.
Another factor that complicates things is that for many years there was no standard naming conventions for labeling data fields. With no common frame of reference, the task of seeking out problem fields and replacing them with 4-digit 2-byte fields becomes increasingly complex and is one that is almost impossible to automate. Each line of computer code must be checked by hand.
The estimated costs for solving this twofold problem have been stated by some as being as high as $600 billion, a daunting figure that is only made somewhat more palatable when compared to the possible costs of the catastrophic global failure predicted for the year 2000 if the problem is not corrected in time. Now let's get back to Earl and Mike.
There is a feature that's provided by the COBOL manufacturers, software developers, and it's called the source statement library. In the source statement library, a programmer takes a set of names for a particular record, and this set of names is stored under a name. Then, when the programmer wishes to use that set of names in a program, the programmer merely puts in a call to copy this code from the source statement library into his or her program. This is not only efficient on a programming standpoint, but it also makes for standardization that everyone is using the same set of names. There are some facilities that require this and others that don't, so it depends on the actual organization involved.
But in theory, this multiplication could have gone on for a very long time, and there could not be much in the way of historical record keeping.
That's correct. That's correct. And the other situation that we have is that even if we knew every record layout in which there was a year field, many times organizations have not established and enforced what they're called naming conventions that requires a programmer to follow a certain set of standards in the way they name fields. As a consequence, we don't know what to search for if we were able to actually look at those record layouts and try and find a particular field. If, for example, they had naming standards, you would find that, depending on the company, you would have some prefixes to it, but the year field would always end either in year, the word year, or YY, so that we would know what to search for. But when no standards have been involved, we're really at a total loss.
Earl, who oversees this process and how does it get done? Do you hire a consultant?
Well, originally, if programming management had been very attuned to these kinds of techniques, there would have been a person that was assigned to the source statement library. And if I were going to write a program that accessed a file, I would come up to the librarian and I would say, do you have a record layout in the library for this particular file? And the person would say yes, and I would say, well, what is the name that I will use to copy into my program? And they give me that name. At the same time, this librarian would then say, all right, now, what's the name of your program that is going to use this file? That way, we would have two pieces of information. We would have the list of all of the files that are out there and the name of them. And we would also have a program file matrix which shows for each file which programs actually use that file. We would then be able to backtrack if someone said we have a problem with a particular file, and we would know every program that had to be addressed in that particular situation.
But that's in the ideal world, isn't it?
That's in the ideal world, Mike. The way the situation is now, someone says, well, how do you cure the problem? It's akin to that story, how do you make tiger stew? First you catch a tiger. Well, what we have to do now is a firm has to go through every record layout in every program and try to find the occurrence of a year field. And if it's only 2 digits, then it has to be changed. And then the program has to be recompiled, and then of course the actual data records have to be modified to match that, which is a totally separate problem. I'm primarily concerned with the software in terms of how do we cure the programs.
So what we do is go through this search, this massive search. Can corporations do that on their own? Do they have to hire consultants?
There are many firms, Mike, that have actually hired a large number of additional employees, and they have more or less a task force for the year 2000 problem, and those people are sort of on the side addressing that issue while the day-to-day activities are going on with their normal employees. Other firms are trying to bring in consulting companies to address this problem. The firms are having a little bit of a problem, however. It's my understanding that the big 6 CPA firms have decided not to address this issue on a consulting basis, and the primary reason is that the firms that want to hire them want a guarantee that there will be no problems when the year 2000 arises, and this is a tremendous liability to put on an organization. And so that's why some of the firms are backing away from this kind of consulting engagement.
Earl, if I'm listening to you, I might think to myself, I don't think we've got anything that's so dependent on dates that we need to go out and hire Earl Chrysler at $300 an hour to superintend this repair process. Why don't we just go into the year 2000, see what happens? Maybe we'll have a problem, maybe we won't. Is that a rational strategy?
It is, Mike, for small firms or an organization which doesn't have any date-dependent applications which are what you'd call mission critical or really important to the organization. In that case, it might be the best solution is just to hold tight onto the arms of your chair and wait. And then when something blows up and the system comes out with irrational numbers, go in and address the problem at that time.
So it may be that in the year 2000, we'd have a little problem instead of a big problem. Something might go wrong, but overall our systems are okay, and we bring in a repair crew and we repair that little problem and we just go on.
Well, that could be a solution for smaller organizations. However, it depends on how an organization wants to manage its MIS facility. To me, the year 2000 problem could be approached in perhaps a more short-term expensive way. And that is that we would take all record layouts for all files, and for each one of the files, use a set of naming standards that the organization develops. Develop the one master file record layout to put in a library, and then bring each program in and put in this new copied standard version of the record layout. Then you could take the program itself in, and since you had the old set of names, which was originally there, and now you have the standard set of names, you could just use a word processor to go through and do a search, and when you find the old name, do a replace with the new standard name. Now, admittedly, this is going to take a horrendous effort. I'm of the opinion that if a firm did this, that once it was done, and then they decided, now we're going to look for all the year fields and we're going to address the problem, I think the efficiencies that they would realize then would probably compensate for all of the work that was done up front to get their files clean.
Would that be a more rational strategy then for a bank or savings and loan or larger company that really had date-dependent files?
Oh, yes, yes. And once this was done, the advantage is the fact that should anything happen in the future that was going to cause a change in any major field of a record, they now have all of the procedures in place whereby they can very easily go through, look at the program file matrix, find out which file is affected, know which programs are affected, go to the library, bring out that record layout, change the record layout, put it back in the library. They know which programs were affected. They bring in those programs. They recompile each one of them, copying in the corrected version of the record layout. And now everything is clean.
Earl, you talked about establishing naming conventions and source statement libraries. What if I'm a viewer and I'm thinking to myself, I don't think we did a very good job at that. Is the solution that you just spoke about the alternative for a group like that?
Yes, I would say that they're the ones that should think, okay, well, we made mistakes in the past, but now is an opportunity to clean up everything and start doing it right.
And that probably is going to be pretty expensive, isn't it?
Yes, I would say that it's going to be expensive, but I look at it this way, Mike. The approach that they're doing now is, I'd call it find and fix. And again, they're going to have to examine every record layout they have for every possible way some programmer could have represented the year field in the record. Then they're going to have to make a change to that. And that in itself is a horrendous effort because, as I said, the record layouts for a given file is not just one because of these programmers now coming up with their unique set of names for the fields. And so you might have 8 or 10 record layouts to look at for each file. And again, you have no standards, so you don't know what you're looking for.
Are there enough people in the world to solve this problem?
Oh, I'm sure there are, Mike. The major problem, I think, today is that the people are unsure of how to attack it. They understand they have a problem, and they're not sure where to start. And as a consequence, they're in a quandary. And I've talked with some folks who've said that in staff meetings for the last 2 years, every month or so, someone says, we have a year 2000 problem coming up. And they sit there and say, yes, we do. And then they just move on to the next agenda topic. They decided not to address it primarily because they didn't know how to address it.
Well, let me pose the question to you, Earl. We've just got a couple minutes. I'm a viewer, and I'm sitting here watching you, and I don't think we've done very much about this other than had it as an agenda item and passed it on for another time. Yeah. What should we do? We're a fairly large American corporation. When we leave this meeting or viewing this tape to solve this problem, what specific steps should we take?
Well, again, I would think that the data processing or MIS people should look at all of the records and say, what files do we have that our programs process against? And then find the record layouts for each one of those files. I would then start out by developing a program file matrix so we know which programs are addressing each one of those files. Now, this is going to be a project. Then once that's done, they would then, in my judgment, be best off by going into each one of those programs, removing the record layout names now, developing a standard for that file, putting it in the library, throwing away the old and copying in the new, and then doing a search and replace old for new in each one of those programs. They then have a clean environment in which to start.
Guaranteed, Earl?
Sure.
Thank you, Earl.
It's been a pleasure, Mike.
A few final notes to consider before we move on to our next segment. The process of fixing the Millennium Bug will be an arduous one for most companies. An important point to remember is for a company to develop a source statement library that keeps records and data according to a set standard of organization. Unfortunately, many companies will skip over this step, complicating the fixes and making future program modifications more difficult.
Well, a number of companies are developing task forces to tackle the tremendous workload ahead. Others are turning to specialized consulting firms, while a few are not taking any steps whatsoever. And their theory is wait until the system crashes, then move to fix the specific points where problems occurred.
Smaller companies with little or no date-sensitive information seem to be deciding on this approach. However, as we saw in the news package at the beginning of this segment, large companies are beginning to get anxious about the 2000 crash and are taking steps to ensure their suppliers share their sense of urgency.
Well, we've come to that portion of the program when we cover recent developments and bulletins from the Financial Accounting Standards Board. However, the FASB has been strangely quiet in the last few months, with no updates being issued. So as soon as new developments do occur, you may be sure that we here at Aftn will bring them to you as soon as possible. And now let's move to our final segment. This month, sexual discrimination issues and lawsuits. They have substantially altered the face of the modern workplace.
In the last decade, two primary types of discrimination issues have arisen: quid pro quo and hostile environment. To examine the kinds of impact these issues continue to bring to the workplace, Mike Tucker speaks with Tim McAvoy, a member of the law offices of frequent Aftn contributor Nancy Lassiter.
Mike and Tim examine the ramifications of Title VII in quid pro quo and hostile environment cases, same-sex discrimination issues, and recent cases before the Supreme Court, including Ellerth versus Burlington and Farragher versus the City of Boca Raton. But first, a news package from Charles Bierbauer.
Beth Farragher took a part-time job as a beach lifeguard in 1985 when she went to college in Boca Raton, Florida.
It paid 50% more than any other job I could have gotten when I was lifeguarding out there.
But Farragher says two supervisors immediately began harassing her.
My bosses groped me, they grabbed me, they talked dirty to me, they described parts of my body as if I were an object instead of a human being. And this continued the entire 5 years I worked at the City of Boca Raton.
A male beach captain told her City Hall doesn't care. City Hall says it didn't know.
She, as a matter of common sense, Ms. Farragher was to give notice to someone in the city who could have done something about it.
Farragher won her suit against her supervisors, but she's asking the Supreme Court to hold Boca Raton liable for not having a clear policy against sexual harassment. The justices had some concerns. Justice O'Connor, don't you think every employee in America knows that if there is mistreatment, they can complain? Justice Scalia, why do you need a policy for telling someone something is wrong? Chief Justice Rehnquist, we're looking for something that's simple and easy to administer. A second case before the court argues that the Lago Vista, Texas school district should be liable for a high school teacher who forced a 15-year-old girl student into a year-long sexual relationship.
When it hired this teacher, it didn't hire someone it knew to be a sexual predator. He turned out to be that way, and that's unfortunate. And that's repugnant, and the man should be in jail, and he was in jail.
The Lago Vista case comes under federal education law, which ties federal funds to non-discrimination pledges. The law also recognizes another form of sexual harassment. It's called quid pro quo. Do something for me and I'll do something for you. The court hears that case next month.
Tim, we hear a lot about sex discrimination. It's in the news all the time. Is this as important as it seems?
Absolutely, Mike. You may recall Demi Moore was in a film called Disclosure. We've got Paula Jones. We've got sexual harassment all over the TV, the media, and in the office. And as a practicing attorney in this area, we find our clients have questions every day about what they can and can't do.
Brings a warmth to your heart.
Absolutely, absolutely. Sometimes we joke that these laws are actually lawyers' relief bills.
What is sexual discrimination?
Sexual discrimination can take many forms, and Mike, I'm sure you're aware that states regulate it, many states regulate it, the federal government obviously regulates it, and the statute which most employers are going to deal with on a day-to-day basis is called Title VII. It stems from the Civil Rights Act of 1964, and this is a law passed by Congress which basically says employers, you can't discriminate on the basis of sex with respect to somebody's job, the terms and conditions of their employment. This includes their pay. It also includes promotions, transfers, and other benefits.
Doesn't Title VII go beyond sex? Aren't there various suspect categories that are included
Absolutely. Race, gender, obviously. Also, there are ancillary laws like the Americans with Disabilities Act, which essentially follow the same framework as Title VII, but employers are simply deluged with claims these days.
So let's talk about Title VII. What is its purpose? What is it designed to do? Is it achieving that purpose?
Well, if you look at EEOC statistics, about 16,000 sexual harassment claims were filed last year. About 12% of those claims were filed by males, which is an increase from about 8% from previous years. So if you look at sheer numbers, I suppose the plaintiffs would say that these laws are working, and we're seeing larger and larger recoveries against employers. The Civil Rights Act of 1991, which modified the earlier law, now provides for compensatory and punitive damages and jury trials in these cases, which is a very scary proposition if you have a questionable case.
Tim, isn't this really like legislating the weather?
I suppose you could say that, Mike. That's a good way to put it. But the weather changes, and I suppose the laws do equally.
What are the various types of discrimination that would be actionable under Title VII?
Well, most people hear about sexual harassment. Those are the types of claims that generally make the news. They often involve far more sensational sets of facts or circumstances, a pattern or practice, for example, of boorish behavior in the office. But frankly, one of the more prevalent types of sexual discrimination is called quid pro quo. That obviously means this for that for Latin scholars. And it basically involves a situation where a boss or a supervisor will say to a subordinate, male or female, I'll give you a promotion, I'll allow you to go to continuing legal education or whatever the case may be if you sleep with me. And of course that
What
can
a bargain.
Exactly, right. I guess it depends on your perspective.
Well, what do you have to do in order to win a case based on quid pro quo?
Well, quid pro quo will require you, number one, to show that you're in a what's called a protected class. And in these types of cases, that would mean if you're a male, Title VII is equal opportunity, by the way. Males and females can bring these claims. If you're a male, you'd have to show that a female supervisor basically conditioned a job benefit, something tangible, and conditioned that upon sexual favors or sexual treatment, or made a decision based on your gender. The same rule applies in the opposite direction for women and men.
So would this entail promotions, or going to conferences, or a new job, something like that, a greater opportunity in the workplace?
Absolutely, within the company. Obviously, if you leave the company of your own free will, you're not going to have a claim. But within the company, Congress' basic intent here is to establish a level playing field. And basically, if you're an economist, I suppose some economists would say that what we're trying to achieve is economic efficiency. We don't want our performance or our end product judged by gender or by factors which would be outside of what would be deemed efficient, I suppose, by the stock market, et cetera, et cetera. But humans being what they are, office politics, as you know, water cooler humor, and frankly, just simply human sexual desire often gets in the way. And these laws are intended to try to minimize that to the extent possible.
So in a quid pro quo action, Tim, I have to get something in return for my boorish behavior. In other words, mere boorish behavior, mere bad manners isn't enough.
You're right, and I got off on a tangent, but as far as proving that type of case, you would then have to show that a tangible job benefit, a promotion, a transfer was conditioned upon your giving the sexual favor to the supervisor, and that you either submitted against your will and were discriminated against on that basis, or you refused to submit, and then some form of retaliation occurred. Let's say, for example, I'm a supervisor and a subordinate employee comes and wants to be considered for a slot in another department. I have the ability to recommend that person for the job or not, and I make it essentially known to her that if she meets me at a bar and has a few drinks and then goes to the hotel across the street, that it's in the bag, so to speak. That would definitely be a problem for any company with a supervisor engaging in conduct like that, because you have a job benefit directly linked to a sexual favor.
You know, Tim, when you were describing that, it's an interesting scenario, but quite often, isn't it A's word against B?
Quite often it is, but here's a real problem for employers that I think many of the clients that I see out in the world, and of course none of my clients have these problems, but in terms of what we see on the street and in the courts, clients believe that my word against your word, isn't that good enough? But you can't avoid a jury trial, and here's the real fear for employers. You can't avoid a jury trial if it's just A's word against B's word. The court will not use any of the procedures that are available to dismiss a claim in the early stages if it's A's word against B's word.
So no successful motion for summary judgment.
Exactly. You're familiar with that procedure. And summary judgment, obviously, for people who don't know, or a motion to dismiss, is a way to get rid of a lawsuit very early in the process. But when you're simply arguing about credibility, you're probably going to go to the jury, and your fate will be in the hands of a bunch of strangers who are going to hear this case for the first time, and it often depends upon the skill of the lawyers as to whether you're going to prevail.
Tim, you've been using the term supervisor quite a bit. Can we have quid pro quo harassment by a fellow employee of another employee where you don't have a supervisor at all?
No. As you may suspect, or it seems, I suppose, inherent in the definition of what quid pro quo harassment is, the harasser has to be somebody who can make your job promotion or your transfer happen or not happen. Obviously, a co-employee or a colleague or somebody below you in the chain of command is not going to have that power. What Title VII and quid pro quo harassment or discrimination is all about is the ability to wield unjustly, basically a sexual hammer, if you will, and prevent people from succeeding on the merits for reasons having to do with gender, sex.
Is this a quid pro quo opportunity? Can females harass males?
Absolutely. As I say,
Males, females, females.
absolutely. Justice Scalia, in a recent case called On Kale versus Sundowner Offshore Industries, suggested, and in fact went beyond suggesting, and stated that Title VII does not have to be rooted in sexual conduct if you're going to bring a Title VII claim, that there may be males or females who will discriminate on the basis of gender simply because maybe they want an all-male office or an all-female office, and they'll create conditions so that males or females are discouraged from working there or from conducting themselves as they otherwise would.
Tim, what happens if the person who is alleging harassment says, no, I won't give in to this, and nothing really happens other than perhaps some kind of an offer for something in return? Is that actionable under Title VII?
You raise an extremely interesting question, and this gets us into the other category of sexual harassment. And I'll tell you, Mike, that the Supreme Court this summer, I expect in June or July, is going to decide a case called Ellerth versus Burlington Industries. It comes out of the Seventh Circuit Court of Appeals, which basically covers cities like Chicago and the Midwest. And what that case is going to consider is whether you can have a quid pro quo, a this for that, a sexual favors case, where a supervisor asks for favors or suggests that an employee can get ahead in the company, but then nothing happens to the employee, and in fact the employee is promoted. And what happened in the lower court is that the Seventh Circuit said an employee can proceed on a quid pro quo claim even if they don't submit and then nothing happens to them. And so this is the first major court to come out with a decision like that, and I expect that the Supreme Court will clarify that and actually answer your question directly this summer.
You know, Tim, sometimes we know workplaces give rise to consensual relationships, to social relationships of varying intensity. Can these deteriorate into a Title VII lawsuit when love having turned to hate, so to speak?
Absolutely. Everybody is familiar, I suppose, with the game of love and office politics and office love. Frankly, it's a fact of life, and most of us at some point in our careers have seen it or know people who've been involved in situations like that. And this is really, if you're management, this is really a time bomb waiting to happen. There are a lot of mottos that are tossed around that are probably not suitable for the camera as to whether you should or should not get involved in these relationships. But if you're a supervisor and you get involved with a co-employee, there actually are cases where third parties, people who are not even involved in the relationship, will sue. And under certain state laws, like in California, courts have recognized causes of action for people who say, hey, because Jane and Joe were involved in a relationship, Joe or Jane got special treatment that I didn't get, and that's sexual discrimination in and of itself. So yes, that is one can of worms. The other can of worms is when the relationship goes south and turns sour, the disappointed lovers we see in divorce court, we see on television, melodrama, movies. We see the lengths that people will go to seek revenge. And we do see discrimination claims coming out of failed relationships. So it's really a time bomb, and it's something that companies really need to be aware of.
Tim, do you advise your employer clients to simply ban socialization of this type? And could you do that? Would it be effective?
I think that would be pretty heavy-handed. You may lose your workforce if you had a rule like that. I think that most people use their discretion, and even if you had a rule against inter-office dating, it would be broken. I'd be willing to bet almost anything. By the way, don't take me up on that, but I'd be willing to wager that the rule would be broken. So as a practical matter, no, employers can't control this, but what employers can do is simply counsel prudence. And you raise an interesting point, and I don't mean use the word prudence, but what you can do is have a sexual harassment guideline. And in fact, the EEOC in the late 80s and early 90s was really on the bandwagon to have all employers establish guidelines in their employee handbooks or otherwise promulgate policies about sexual harassment and sexual discrimination. And the courts actually consider such policies in lawsuits. If you're an employer and you have a policy, it's really going to get you a lot of mileage to be able to show that you've developed a policy, you've communicated it to your employees, you have training, you take prompt remedial action when people have legitimate complaints. In other words, you investigate. And these, by promulgating and talking about these policies, your employees become sensitive, I believe, and you develop an atmosphere where you're going to minimize claims. And so really, employers really need to be thinking, pardon the use of the word, but prophylactically with respect to this whole area and with what you can do to avoid claims, because an ounce of prevention is worth really 10 pounds or $10,000 or $1 million worth of,
yes.
Exactly, right.
Tim, are we talking about something that's good for large and medium-sized employers, but you know, if you have 10 employees, should you have a policy as well?
Yes, you should, and you raise a great point, because unless you've got 15 or more employees, Title VII is technically not going to apply to you, but, and there are many permutations to that rule that we really don't have time to get into, but a lot of state laws incorporate the federal discrimination laws or have sort of baby discrimination laws of their own that apply to 1- and 2-person shops. And there's a tort which is really on the rise. It's sweeping almost every state in the country, called wrongful discharge. And there are, again, a number of permutations to this doctrine. But I don't care how big or small you are, you need to have these policies. You need to have your employees be aware of the consequences of engaging in this type of behavior, because they can be devastating to a company. And let me give you a good example of what I'm talking about. If you're an executive in a large company and you get a rap as a harasser, that's basically an albatross that may well follow you around for the rest of your career, especially if these things get into the courts. You may see your personal life exposed, dug into by the attorneys. It's a sad fact of the system, but often there are very harsh consequences for getting into it in the courts. And for small companies, it's much easier to get a reputation, especially if you're in a small community, as a workplace that has a hostile environment. And that's just not something that anybody wants. It's not good for business.
Tim, you mentioned the concept hostile environment. That's the other side of sexual harassment, isn't it? Quid pro quo and hostile environment?
Right, absolutely. And I'm glad you brought that up. This hostile environment is really the most popular form of sexual harassment or discrimination claim. Like the Demi Moore film, like Paula Jones, like many people who claim that people create hostile environments in the workplace. What this basically means is that you don't have a quid pro quo situation where somebody says, all right, sex for a promotion, but rather what you have is the sort of stereotypical person who hangs out at the water cooler telling off-color jokes. Maybe you have somebody who brings a stripper in at the lunch hour. We've seen cases like that, not fortunately with my clients, but they're reported in the case books. You may have people patting people on the behind. You may have people groping. I remember hearing about one case from a friend where a supervisor in an office used to go into a closet next to someone he was particularly attracted to and play with himself. And he let this be known to the person, I suppose somehow in perhaps some state of delusion, hoping that it would turn her on. But needless to say, he was quickly sued and the case settled out of court.
Wait a minute, Tim. Here we have a situation where somebody is obviously out of control.
Out of control.
And there are all kinds of people that are out of control, but why, as an employer, should I be responsible for that?
Well, and here's a great point. With this hostile environment, what that basically means is that the courts will tolerate a certain number of off-color jokes. We don't, as lawyers, like to admit that to our clients, but it's true. There is a certain amount of behavior, and Justice Scalia even recognized in March 1998 that human behavior being what it is, people are going to engage in a little bit of off-color humor or behavior. That does not violate Title VII in and of itself. But when that behavior becomes pervasive, when it's frequent, when it begins to impact an employee's ability to work, when it's interfering with their ability to concentrate, when the atmosphere is just sexually charged, that's what we call a pervasive hostile environment. And that's when a plaintiff may emerge and say, look, this whole office is just, I can't work anymore. I have psychological damage, I have psychological harm. And the courts basically weigh the number, the type, how often are the jokes made, how often was somebody patted on the rear end, or on the other hand, there may be one horrible act, like somebody, as I explained, going into the closet and perhaps being out of control. There are actually reported cases of office rape. Fortunately, they're rare, but obviously that one incident in and of itself, if it's severe enough, may create the basis for a claim. If you, on the other hand, though, like I say, generally the cases which come are a bunch of off-color jokes, persistent rear-end slapping, perhaps basically locker room humor, inappropriately aired in the office.
Tim, if I were an employer and I just heard what you said, I would think, I want no part of that. I think that is completely ridiculous. But if you're telling me I'm going to be sued, okay, tell me how to avoid it. What should I do?
Right. And this brings us back to the whole area of personnel policies and training. And let me just add a bit about employer liability. If you have a supervisor like this who's out of control, most courts say that unless you knew or should have known about the hostile environment, you're not going to be liable. So if we're talking about an isolated occasion, in fact, there's a Supreme Court case pending as we speak that's going to clarify the rules on this issue. It's called Farragher versus City of Boca Raton. It comes out of the 11th Circuit, which includes Florida, where obviously the city of Boca Raton is. But in that case, the 11th Circuit said, like most other courts, unless you knew or should have known, you're not going to be liable. And Boca Raton was exonerated, essentially, and the plaintiff is now appealing because the Court of Appeals said, hey, how could this employer know about the boorish behavior going on a remote outpost? It involves some lifeguards out at the beach at Boca Raton, and the plaintiff never complained to higher-ups, to people who were sufficiently higher up that they could do anything about the problem. And so the court said, hey, we're not going to hold the employer to an impossible standard of knowing everything that's going on at every remote outpost. But there is a word of caution here. We don't know how the Supreme Court will eventually rule, and it's a good lesson for employers to basically stop, look, and listen. Be aware of what's going on in your offices. Create a chain of command if you need to. Have an ombudsperson, I say ombudsman, ombudswoman, ombudsperson, whatever's appropriate, to sort of field complaints. Maybe some firms now have 800 numbers. Maybe you have somebody who is particularly close to your line employees who can act as a middle person and field complaints. You establish a grievance procedure, a confidential one perhaps, where management can become aware of problems and root them out early. So you have that kind of situation. You have a personnel policy. You have a training session. You announce that you're an equal opportunity employer. You explain what sexual harassment means and that it won't be tolerated. And then if you have a situation where somebody's out of control, you discipline them or terminate them if it's appropriate. Because unless you actually put your money where your mouth is, the courts are not going to regard your policies as really being helpful.
Tim, as kind of a final word to employers, you can have a policy and a handbook and everything else. It's got to be effectively communicated, doesn't
Absolutely,
it?
Mike, and you hit a great point, because so many people will simply get a policy, bury it in an employee manual, and they won't effectively communicate it. In fact, the City of Boca Raton case that we were just discussing, one of the plaintiff's claims is that the city didn't have a policy from 1985 to 90, at least not one that was communicated to her. And that can be a real problem for employers. They've got to figure out how to explain that. So you've got to have a training program. This has got to be a very deliberate, thought-through process by CEOs or closely held corporations. Whatever the case may be, you've got 3 employees or 3,000. You need to think out a strategy and implement it.
If you've got employees of widely varying personalities and sensitivities, who are the people most likely to file a lawsuit against you?
I'm not quite clear on the question.
Who's going to bring the lawsuit in a large workplace? Somebody who's highly religious and very sensitive to the sexual harassment issue, somebody out to make a lot of money from you. Where do they come from?
Mike, they come from all over the place. As varied as human beings are with their motivations, I've seen in the years that I've been practicing people who've come from every area you've just mentioned. People who were just malingerers, who knew they were on their way out, who the company, due to their good graces, put this person on probation perhaps, or gave them one last warning. This was a signal to the employee that they should go out and try to dig up a claim to, number 1, put their finger in the eye of the company, number 2, perhaps to seek an extortionate settlement, number 3, just to get back at that boss, and maybe even to get back in a failed relationship, an inter-office relationship, to cause pain, basically. We see people do this in life. They do it in the office.
Tim, one final question, since we're running out of time. Are most of these cases settled?
Yeah, they are. I mentioned the incident about the closet. That's a case, no lawyer would ever take that case to trial if they wanted to keep their bar card. And many cases which are egregious will settle simply because no company can afford or wants that kind of publicity, especially in the 1990s and as we move into the 21st century. A lot of other cases which are small, which are arguable, it's a regrettable fact that litigation costs are so high that perhaps they're best just to be settled. There are a category of cases in the middle that are unclear or perhaps simply out of principle. And I'm proud to say that many employers will fight simply out of principle because it's the right thing to do, because we have a malingerer trying to gouge the employer. It's not right to pay that person money. But in the end, of course, we have to look to the bottom line, and we have to look, for example, to the fiduciary duties that we might hold stockholders, closely held or large corporation. So there are a lot of considerations, Mike, and it's really best to get with a good employment counsel to discuss your options.
Thanks, Tim.
And that does bring us to the end of this edition of AFTN, and we hope you found it informative and educational.
If you'd like to get in touch with us here at AFTN with comments or suggestions for future programs, please contact us at the numbers and addresses you see on your screen.
And do remember to take a moment and fill out the evaluation forms on our program. We always appreciate your feedback.
We'll see you right back here next month. Till then, though, thanks for watching.
Take care, everybody. Bye-bye.